Hi, welcome back. You're watching Trading Hour. Joining in now, we have Sampath Reddy, Chief Investment Officer of Bajaj Allianz Life Insurance, who joins in to talk about, where the market looks to be headed. Hi, Mr. Reddy, thanks very much for joining in. I wanted to begin by asking you, how you would rate your conviction to buy stocks today versus, say, a year ago.
Markets have corrected somewhat in the last couple of months, but still, I think the valuations are higher than the long-term averages, especially in the backdrop of interest rates going up globally and as well as in India, and liquidity is getting withdrawn. I think it would be difficult for the markets to do well at this juncture. By the time maybe in another 2 to 3 months down the line, we could see substantial part of the rate hike could be behind us. I think that's when market will begin to rally from then onwards. So at this juncture, we are somewhat cautious, and maybe the consolidation phase of the market will continue for some more time.
So for the next 2 to 3 months, as we wait through rate hikes in India as well as globally and ponder over the earnings season and what lies ahead, is it best to, do you expect a time-wise correction in the market, or do you expect a correction, a price correction?
I think largely a time-wise correction is more likely to happen, I think, at this juncture. Even if you look at the corporate earnings growth also, the earnings growth also is coming down. About 3-4 months back, corporate earnings were estimated to grow about in the range of 15 to 18%. But now, if you see the earnings growth estimates for the Nifty 50 companies has come down to almost about 10% for the FY23. So last 2 to 3 years, we had seen a very good, robust earnings growth. On that backdrop, we had seen the market doing quite well, and of late, earnings are actually getting downgraded. Of course, some of these earnings downgrade is driven by more like a commodity kind of a companies, whether it is the export duty and steel companies, or the recent duty on the petroleum products. All of this has led to the earnings decline. So overall, we are in a phase of earnings decline or earnings cut. I would not say earnings decline, or rather earnings cut phase. I think all of this thing will probably come to an end in about 2 to 3 months time, in about 2 to 3 months timeline. So that's when I think the market will begin to bottom out and begin to rally. So it will be more of, I think, in the time correction. I would think at this juncture.
Do you hold IT in your portfolio?
Yeah, we like IT, and we've been holding it for quite some time. Of course, the last 2 to 3 months, the sector has been, getting derated largely because the growth concerns in the U.S. market, and there are, fears of the, recession coming up in the U.S. market. All of that is leading to some sort of, derating in the PE multiples for the sector. But I think, the sector offers a very good, high quality companies with very strong return on capital employed, companies with great corporate governance. I think, in that backdrop, we continue to like the sector. We continue to have a good amount of investments there. And also, of late, the rupee depreciation is also, going to help the sector, overall. But at this current juncture, I think, we are facing headwinds in that particular sector.
So, Mr. Reddy, besides this, what would be your other high conviction bet, in terms of sectors?
Yeah, one of the sectors which has corrected a lot again in the last 3-4 months was again the metal sector. That has also corrected a lot, and valuation looked quite attractive there. Even after the reduced earnings for the sector, as such, whether the steel or aluminum companies, the earnings for FY23 and FY24 will likely to be far higher than that of FY20 and FY21. So the earnings are much higher than what it was about 2 to 3 years back. And not only that, due to strong cash flows in the last 12 to 15 months, the companies in this sector got deleveraged quite well. So I think that sector also we like quite well. And apart from that, the banking, especially the top 5-6 banks, private sector banks, we like them quite a bit. Valuation multiples are also very attractive there, vis-a-vis what they are below the pre-COVID level of multiples, I would say. And the sector is poised very well. Credit growth is now picking up, and the asset quality is improved dramatically, and pretty much the provision cost will be in line with that of the pre-COVID levels going forward. So the sector, the top 5-6 banks especially, we like them quite a bit, and the growth is also coming back. Balance sheets are very, very robust, and valuations are attractive there.
Did you trim your holdings in any sector or themes in the last 3 months as the markets corrected?
I would think we may have trimmed a little bit in the consumer sector, largely on the valuation side, but otherwise we were sitting on some amount of cash. We're actually looking to deploy that in the last few months rather than trimming any of the sectors as such.
Mr. Reddy, this rupee depreciation theme, has it been a bit of a worry?
It's not. I mean, I would not think it is a worry. I think some of the sectors which are export oriented, especially it could be pharma, it could be even the IT, it could be even metals as such also will get benefited in terms of the softer rupee, given that the pricing is in the dollar terms globally, and they get better realizations if the rupee were to depreciate. I don't see as a major worry for as such, especially most substantial part of corporate earnings, nifty EPS earnings would come from rather rupee depreciation. So because of that, I don't see it as a worry. In fact, it would offer a growth driver for some of these sectors in this space.
Coming back to the point about IT, you're bullish on the long-term prospects and you have a considerable holding. So in the last 6 months or so, as we've seen the stock, the index correct close to about 25% and many of the large caps falling close to about 40% from the peak levels. You have ridden through all that correction? You've been holding on to the stock prices through that?
I mean, largely, we've been invested quite well in the IT services sectors. Of course, we participated in the upward, and so some of the we continue to hold them. Of course, in that backdrop, in the last 2 to 3 months, we have suffered the downside as well. But broadly, there could be small change in terms of exposures, a few basis points here and there. But largely, we've been holding the sector. We continue to like that from a longer term perspective.
Any thoughts on telecom? What have you made of this news flow of Adani participating in the 5G auctions?
I think in any sector, any new entrant with deep pockets and the strong corporate, any corporate with a strong the business background enters the sector is going to be causing somewhat disruption to the existing player for sure. And even though the group has clarified that they're not looking at this juncture the retail segment of the telecom, I think it's still going to pose some sort of a worry to the existing players, and we have to see how the spectrum auctions get unfold, and who will really back the spectrum. That will determine overall the impact implications on the sector. But as such, we have seen in other sectors also, whether it is cement, whether it is paint, any large industrial house, any large group with a credible experience in terms of running the high quality businesses enters a new sector. Companies in that space got derated for a short period of time. Similar thing could happen here. Especially the enterprise segment, I believe it's is going to be highly profitable segment for the telecom companies. So that could be a little bit of a worry for the incumbents.
Okay, Mr. Reddy, thanks very much for your time today, and thanks very much for taking us through the sectors of interest. A quick break. On the other side, we'll talk about the big expectations from the cement space this quarter on our special segment, Quarter Se Quarter Tak.